Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 9th, 5:33 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market in an uptrend across all three time frames that we track, meaning the five major indexes are all trending above their short-term 21-day exponential moving average, their medium-term 50-day moving average, the long-term 200-day moving average. We've also got leaders in an uptrend, and some of those leaders taking it on the chin after hours, while others going from just something that you keep an eye on to big earnings gap ups, and they get our attention. We're going to talk about both sides of that coin today when we go through the chart. So what happened today? First, pullback on the S&P 500 after 7 straight up sessions, pullback from the all-time high. Leaders giving back some of their recent gains. For the most part, you can see our G5 collection of growth ETFs that we track down 0.7%, the worst being ARK-K. While QQQJ was slightly positive. So a little bit of a mixed bag there, but all in all, some leaders did really well today. As I mentioned, we had some new ones that we definitely want to start keeping an eye on, but some of the recent leaders giving some back, and then some even more after hours. S&P 500, minor gap up, and then it sold off hard before 10 a.m. Eastern, but it started clawing back and only finished down 0.35%. Nasdaq 100 down 0.7%. Dow Jones Industrial Average down 0.3. Mid caps down 0.15. Russell 2000 down 0.6. And on the Russell was actually the value stocks that performed worse than growth stocks today. Although our G5, as I mentioned, down 0.7%. So let's dive into this a little bit deeper, but first, let's dive into the team here at Revere. If you're interested in a fully transparent, we've got videos going back to 2014. You can tell what our thoughts were on any market condition at any time. Just go check them out. You're wondering what we did when COVID was approaching. You're wondering what we did when we started rallying after COVID. You're wondering what we did during the taper tantrum of 2018. You wonder what we did during the stealth bear market of this year. You wonder what we did since the follow-through day of 10/14. It's all out there, never edited, never taken down. Take a look, and if you're interested in getting more information, you can email any of us. You want to talk short-term indicators and inter-asset correlation, Tim's your guy. Email tim@revereasset.com. You want to talk about what it's like onboarding at Revere, give Muriel a shout, Muriel@revereasset.com. You want to talk about anything financial under the sun, Danny will talk your ear off if you call him or email him, Dan@revereasset.com. If you're interested in what we're doing in the portfolios, get with any of us, Hunter, Alex, or Don at revereasset.com. As always, you can call 855-REAL-WEALTH. That's 855-732-5932. Chart time. This is always my favorite time because you know what? The charts are the truth. You can't, there's no opinion. They show price, they show volume, they show exactly what's going on in the market. And we're going to start with the S&P 500, and we're also going to bring up the market facts so that you know the levels that we're using to guide from an S&P 500 standpoint anyway, the key levels. Now, very nice move up off of the test and hold of the lows on 10/13. We had an undercut, closed high, and then 10/14, we had a gap up and a strong follow-through day. Nice move up since then, only 2 down days in the S&P 500. In fact, today being the 3rd. So we paused a little bit here at the highs around this 4,700 level. So that's our first resistance level. Now let's go over here to the facts. So you know our bull case, we're staying bullish as long as we stay above the 21 and the 50-day exponential moving average. Should we break the 21 or the prior all-time high. This is the breakout level here, 45.46. That's our breakout pivot. We can pull back to there and still be fine. That would be a break of the 21, but still above the 50-day moving average. So that's where we want to keep our eye on. A little bit of news today, this morning before the open. PPI was in line, but it's high, I think over 8% annualized. And if producer prices are still high, as Tim and Danny mentioned on our call this morning, that's going to trickle down to the CPI, and inflation doesn't appear to be going away. So sectors that were strong today, software, builders, home builders, ITB, gap up on DHI on earnings, and also Toll and Lennar are the other three. Those are the big three that we keep on our list. ITB, very strong. Retail stayed strong. Oil started out weak but closed green. On the downside, XME, banks, and technology. Tesla really took it on the chin today. We're going to look at that chart momentarily. So back to the key levels. So we're sitting at 46.85. Down below that, you can see we've been riding this purple line, the 8 EMA higher, ever since we got back above it, back on 1014. Everybody's been calling for a pullback really for weeks now, but we continue to go higher today, our first day off the low. We're going to go with what actually happens in the market. We're not going to go by anybody's opinion. There's so much bearish news out there that people are just not believing that the market can continue to do what it's doing. In fact, another news item that I didn't mention here is that Lael Brainard, who is a what can we call her? She loves the money printing press, and she interviewed at the White House yesterday for Fed chairman, so Fed chairperson, whatever. So let's see what happens between her and Jay Powell. Personally, I like Jay Powell. He's very straightforward. He does what he says he's going to do. He answers questions without tap dancing around him. I never could figure out what the hell Janet Yellen was saying when she was Treasury Secretary, but or Fed head. I mean, she's Treasury Secretary now, but we'll see what comes out of that. So a little bit down to the 8 EMA, 21 EMA, 45.83 level right there. That's 2.2% down. Then we've got the prior all-time high in the 50-day moving average coming up quickly to that. So that's at 44.84, the 50-day, 45.46, the prior all-time high. If we could hang out there and get the 50-day above this breakout level, that would give me a lot more confidence on any pullback. We are stretched about 4.5% from the 50-day moving average. Notice the 50-day, though, is just coming off of being flat, so it really hasn't ticked up. It's not taking advantage of these higher prices as much because these lower prices down here are keeping the slope of the line relatively muted. But as those fall off, the slope of the line should come up and it'll close the distance between price and the moving average. So ordinarily, I'd be more concerned that we got like 2 days ago, 4.9%. Usually once you get over 5, it's kind of a red flag, but because the slope of the line is not that strong, I wasn't as concerned about it as I ordinarily would be. Hunter also pointed out back last November, December, that we were very similarly stretched also, and that went on until the end of January, mid-February. So 50-day moving average at 44.84, that's really not going to get any concern until we get back to there. Now, a move down 4.5% is going to feel like a gut punch after this nice move up, but we also got to look at how leaders are acting. We got to look at whether or not it's a sharp pullback or whether it's a muted pullback. Right now, this is a muted pullback off the high, but as I said, we never predict that could turn into a very sharp pullback over the rest of the week. And if it does, we will react accordingly. We don't predict. We observe, interpret, and then react. 200-day moving average, 10.5% lower all the way down there. But bull market studies that I've done, usually harsh corrections start 12% off of the 200-day moving average. So those are some stats. Let's get to some charts, some more charts here. There's your S&P 500. Let's look at the Nasdaq 100. Another pullback, this 400 level on the QQQ, serving as resistance, very similar to 4,700 on the S&P. Natural to pause here, nothing to get overly concerned about. We get more weakness in leadership in leading stocks, then we're certainly going to get more concerned. Dow Jones Industrial Average, still riding the 80 EMA higher, so showing some relative strength over the last 3-4 sessions, which is typical. When the Qs start to weaken a little bit, look at the relative strength on the Qs here, going down over the last 3-4 sessions, just the direct opposite of what's going on with the Dow Jones Industrial Average. Now, the recent breakouts, the mid caps and small caps, you can see very strong, just biding time here after a strong move up off the 21 and the breakout. That's mid caps here, small caps. You can see very clearly the breakout here from this level, pulling back, finished in the upper half of its range today. Pull back in a touch of the 8. I might be looking to re-engage my index long here on small caps. But let's get to some individual charts now, some good, some bad, and some ugly. Let's start with the ugly. Today's move in Tesla. So we know that Elon Musk talked about a ridiculous poll whether he should sell 10% of his Tesla or not because of a proposed non-realized gains tax on billionaires. He said he'd go by the results of the poll. Well, the poll said, yeah, sell. I don't know if this was him selling today. No idea. Big move down, 12%, 150% above average volume. Gave back a lot, basically 2 weeks of the move. Luckily, we took some profits up here when this got extended around 12.25. So we can buy that back cheaper if this starts, if we hold the 21 here and we get back above it. It's part of the trade plan for tomorrow. But you can see the break of the 21 here. We're still sitting on some very nice unrealized profits on like about 45% from our initial entry, which was down here before it came out of the base. So that's probably the ugly chart of the day. Second ugliest chart was PayPal. I mean, this is a really big former leader. We talked about how these new finance companies like Upstart, Affirm, LC have been all the rage, and big negative. The charts of Visa, MasterCard, and PayPal not looking so hot. PayPal with a gap down 500% above average volume, down 10%. I'm not getting anywhere near PayPal now. It may be time for its PEG ratio, which is a 2. PE of 50, growth rate of 25. That maybe it's time for that to be slowing down. We'll see, but anyway, staying away from PayPal. Now let's talk about some good charts here. One we bought after hours yesterday and added twice to it this morning, so we've got a half size position now in Roblox. Massive volume, 1,277%, up 42%. On the day, bought after hours around 100, and then in the low 100s we added 2 more times this morning, closed at the high of the day on massive volume. I mean, this scares the hell out of people buying something up 42%, but it's just a fact of the market that when you break out of a base on an inflection point, which in this case was earnings, an event on massive volume, you're under owned on Wall Street. You typically, it very often kicks off a huge run. We're just going by what happened historically. I don't know if Roblox rolls over and fails tomorrow, but I do know that we're looking for familiar faces in a picture book, like in a yearbook, and this is what you see time after time. Leaders kicking off a big run is a massive volume move up on earnings. Our most recent example was Ambarella, which is still our largest position. It didn't even break out here, but look how it continued higher, up on 1,277% volume, up 27% on its last earnings report. Busted out of there, pulled back, held the 21 perfectly, and now it's just going straight up like a frozen rope. So we've got big gains in this one too. It's just It's just what happens. It's what you see. Big volume move equals buy. It's that simple. We don't take advantage of it every time for various reasons. Mostly, if we don't, it's because of our current portfolio construction makes it too difficult to do it, or we might be getting overweight in a sector, or there's not enough volume in it. But when the volume and the price is there, it's time to act. One we didn't act on mostly because we went with Roblox this morning, but New Relic. This was more on the thin side, 500,000 shares at $126. Didn't meet our minimum liquidity, but after 1,200% volume today, it traded 6.4 million shares. Expect this liquidity to go quite a bit higher. And same situation here. This thing is under-owned by Wall Street. I didn't dig into the report, but apparently it's their conversion to a subscription model. They upped their guidance and they upped their guidance for sales and earnings. 18% sales guidance in this most recent quarter is really nothing excitable, but Alex dug into it, came up with a couple of nuggets for us. So this goes back real high on our list. Another one that goes real high on our list is the trade desk. This thing had been suffering starting with 10/22 when Facebook reported that Apple was impacting their sales because of their new privacy, and basically any ticker that was involved with advertising got hit, and this even broke below the 200-day moving average until yesterday when it gapped up still inside the base on earnings, up 700% above average earnings, up 30% on the day, and then it tacked it onto it this morning, another 9% on 329% above average volume. The trade desk and New Relic go to the top of our watch list, and now we'll look either for, and again, this depends on what we're doing in the portfolios at the time, and that's really the reason why we couldn't chase this one or New Relic after we went with Roblox today. The portfolio is kind of full. Sometimes you got to just get some things out of the way and make room for better opportunities. And we did a little bit of that today, and we did more of that after hours, which I'll get to in a second. But the trade desk saying own me based on price and volume action. After hours, Upstart saying sell me with its price and volume action, which we did after hours. Gap down after earnings, down 20%. And this is one of the 5 that I wanted to talk about, growth stocks that had bad reactions to earnings and are selling off after hours. So Upstart, we got rid of that, took a loss on it. It was less than a 2% position, so really just a paper cut from an overall portfolio standpoint. But 4 others that are down after hours. Unity Software, it's really in the same type business as Roblox is, metaverse software development, but down 9% after hours. It had this big update today off the back of the Roblox report, but given some of that back, still above the breakout area. We're going to keep an eye on this. Sometimes these things get out the weak holders and then they turn right back around and go higher. Gaps work both ways. Sometimes a gap down gets rid of everybody, the chart becomes constructive again, it builds the right side of the base, and it becomes a new leader. Sometimes it doesn't. PayPal, an example of that. Number 3 after hours that's down is Coinbase. Now this has had a big run based on what's been going on with crypto lately, but they missed sales in their report, down 11% after hours. That still puts it above the 21-day exponential moving average. That's how strong it has been, and this is definitely something we're keeping an eye on also. Number 4 after hours is Skin, down 8%. This was forming a nice base, pulled back, bounced off the 21, down 8%. We'll see what this does tomorrow. And finally, Fubo. Everything I read, their numbers were excellent. The reaction, however, it's down 8% after hours. This is a nice flat base that Fubo has put in here, 3 months long, and see if this one reverses. We've got our alert set at the pivot tomorrow. So, but as of right now, those are 5 after hours that are going to, that were in the leaders category. Let's see if they stay in the leaders category this time tomorrow when the market closes. What else did I want to talk about? Amazon had a nice day today. Yeah, don't type that there. Type it here. Amazon, nice day today with some volume, above average volume. And this is an example of one that gapped down on earnings, never broke below the low of that gap down. Took 4 days, it got back above it, and now showing some nice relative strength over the last 4 sessions. Amazon coming up the right side of this flat base. I mentioned ITB Strong, an old stock that's done a reverse split, trying to become relevant again. Now said it's going to split into 3 different companies. GE, it initially broke out of this flat base on the news, but closed near the bottom of the range, breaking into 3 companies. That is the N in CanSlim. I know their medical division is very highly thought of. If they still sell appliances, and you know that those are selling like hotcakes. But GE, let's go to a monthly chart. This is why we don't hold on to losing stocks from 260 to 111, and that's well off of the lows. They had to do a reverse split, as I said, to get their stock back up to a more palatable level, but something going on in GE there anyway. And then the ITB, I did mention this as the strongest sector today. That's coming up the right side of its base. And then the 3 stocks that are acting well: Toll Brothers, DHI, which had earnings today. There's your earnings gap on DHI. And Lennar is the third one, LEN. 3 good-looking charts in Builderland. That's going to wrap it. As always, love to hear feedback from you. I'm on Twitter at Vandenbord. Email don@revereasset.com. The phone is 855-REAL-WEALTH. Wrapping up Tuesday, November 9th with just the facts. This is Don Vandenbord telling it like it is. Thanks for listening, and have a great day.